What's up, guys? I'm Mike from StockedUp. In this video, I'm going over what I think is going to happen in the market in the next coming weeks, next coming days. There's a lot of things going on with the market overall, a lot of macroeconomic things, and just a lot of things to notice in the market overall. So we're going to state the obvious. Obviously, the market has fell so much recently because of the coronavirus, but the market got smashed yesterday, which was Monday, because oil fell. Oil fell one of its biggest down days in history. That's because pretty much Russia, some of the Middle Eastern countries, and even the United States, they're all producing way too much oil, just flooding the market with supply, while at the same time a big consumer of oil, people who buy the oil, which is China, is buying less oil right now because a lot of their factories are shut down because of coronavirus. So another thing is you might be thinking, all right, cheap oil is a good thing. While yes, it is a good thing for us, gas prices are going to be cheaper and stuff like that. There's a certain level. I'm not sure on the exact dollar amount. It might be around like $28 or $30 a barrel, where if oil gets below that, the people who produce oil don't make money. They're at a loss or even break even in the best case scenario. But think about it like this. If 2 months ago, so keep in mind, the United States is a big producer of oil, right? Think about how many huge companies that produce oil are in the United States. They employ thousands of people. They have huge factories. They're huge companies. They have a big impact on people's lives. They employ a lot of people. Now, if they were able to get $55 per barrel of oil a couple months ago, and now they're only going to get $30 a barrel. Think about how that hurts their profits, which in turn is going to hurt their employees, which is in turn going to hurt the economy. So think about that. But now in a trading sense, the market had one of its biggest green days in history right now, biggest single day green days. Personally, if I think the market is going to rise or fall in the next couple days, I would say rise. And the reason I say this is because, guys, look, we are down so much. We're down like over 20% from a recent high. That is huge. Keep in mind that we're down so much. Two, Trump is obviously putting a plan together to ease the fears of the coronavirus. Trump and his team, Pence and even the Federal Reserve Chairman and all of them are they don't want the market to crash. So they're going to say whatever they have to say for the market not to crash or just to ease down. So Wall Street is putting pressure on Trump to pretty much put a good plan together. Trump came out with something today, like he was going to put a 0% tax on payroll or something like that. And at the end of the day, Trump and the big guys, they're going to do whatever they can so the market doesn't absolutely crash. However, on the contrary to that, if we keep seeing these school closures and airlines laying people off, then that could be a bad sign. But given the circumstances right now, I see the market going up because we fell so much, and then the Trump is going to do something to stimulate the economy, and then two, the Federal Reserve is having their meeting next week, which is huge, and they cut rates again, so that's a big deal. And then on top of that, they might issue 50 and 100-year bonds, which would take pressure off the 30 and 10-year bonds, which would be very good for the economy. And then even on top of that, the VIX is up so much, and someone was literally putting $200 million on the VIX index puts. So for example, for this specific contract that expires on March 18th, someone bought 300,000 contracts were traded of this for $330 each, or the VWAP was at 305, but that's a lot. 300,000. 1, 2, 3 times 305. I mean, that's $91 million there alone just on this contract. The only thing to be careful is that there's a small chance that they could be selling this contract as a premium, but I really don't think so because it's so close to the money. VIX is up so much. And the last thing to keep in mind, guys, is yes, whether you think the market's going to go up, down, whatever you think, you have to be careful because implied volatility is extremely high. That means you could think the market is going to go down, and it could go down, and you could still lose money because you played it the wrong way. So if you think the market is going to go whatever direction, it would be safer to play debit spreads or even credit spreads. You just want to do some type of spread because options are so expensive right now. If you think the market's going to go up, it would be smart to play a call debit spread. So buy like the 290 call and sell like the 300 call, or buy the 310 call and sell the 320 call. Do it as like a spread to limit your losses, and then help fight that time decay. Or like, for example, if you think the market's gonna go down, you could buy a put debit spread, or you can just sell a call credit spread. So keep that in mind, guys. There's a lot of catalysts going on. At the end of the day, remember, we are in some of the most volatile times ever. Like we've never seen a market like this before. I'm telling people, if you can survive or even make money in this market, you can do very well when the market is just normal, or anything besides this for that matter. Either way, there's a lot of lessons to be learned. The market's going crazy. There's a lot of catalysts. The market's changing day by day. A lot of black swans, like issuing new bonds, emergency rate cuts, oil falling. So keep that in mind, guys. If you guys learned something or have questions on this video, let me know in the comments down below. But other than that, thanks for watching.